Well, hi everyone. Welcome to this Panalytics webinar. It's the 13th of May. It's one of two webinars we'll be doing this month, and I'm delighted to see a very substantial attendance today. And I'm delighted to see how it's traversing the entire continent. We have people from Western Australia, Tasmania, Queensland, New South Wales, Victoria, New Zealand, both islands represented. Welcome. I'm looking forward to spending just short of the next hour with you on this topic of from survival to resilience. And I hope that's timely. Given the attendance today, I suggest that this is a timely topic for all of us. Let's take a little bit of time on some housekeeping. Many of you are familiar with the Zoom platform, and you'll know that you can enter a question on the right-hand side there. I promise to respond to all questions. I do not promise to respond to them during the webinar because sometimes we run out of time, but I will get back to you on any questions. And if you have friends, colleagues, family members, acquaintances you'd like to share this video with, we will be making a recording and sharing it with those who are interested. So if you'd like to just absorb the information, have a think, have a listen, and not furiously take notes, you will have a chance to listen to this later. So yes, we're in this fascinating COVID-19 pandemic environment, right? Is it ending? Is it getting better? Is there a sign of returning to normalcy, and is it going to be normal? Is it going to be something different? We don't know the answers to a lot of those questions, but what we do see is that some clients are perhaps a little less focused on simply surviving and are looking further afield to building a more robust and powerful and vibrant and successful business into the longer term. And I wonder if that allows additional opportunities for accountants to take them down that path. It's my view that there are most definitely opportunities. I'm Mark Ferris, Chairman and CEO of Panalytics, and I'm enjoying trying to make Panalytics a very vibrant and resilient business going forward. So I think in life and in business, we need to walk the walk, talk the talk if we're going to properly advise other people. Now, there's three things I'd like to focus on today. Let's just make sure we're all talking about the same thing when we discuss resilience, right? It may mean different things to different people. And then I have a short resilience recipe. Now it's midday in Queensland. I could have called that a cocktail, I suppose, but I'm calling it a recipe. You can choose how you like to interpret that. What is resilience? And then a case study. A couple of our clients who have benefited from a particular approach in this environment and are making a little bit more cash, but they're also adding a lot more value to their clients, and then some resources which might help you on your journeys. Let's get into this. I'd like to tell you a couple of things about Panalytics very quickly. We are in the business of helping accountants build advisory businesses. We've been doing this a long time, and it's a more complex problem than a lot of people initially think, right? There's a whole range of products and coaches and all that are helping you on your journey. And we like to help accountants on that journey as well. And we have a range of content, applications, and our own advisory solutions which can help you to get there. You know, let's be clear on what we mean by advisors. Advisors, we feel, have the capacity to provide guidance and mentorship, right? They can help businesses to get where they want to be, as opposed to processing data, right? Which is what a lot of traditional accountants have focused on, the building of accounting reporting, right? And we feel it's really important, and this speaks to today's topic, to understand the context, the background, the rationale for a business, right? For your clients' businesses. We feel that that's a key ingredient of advisory work, and to be able to express that through what we call the language of business. So that's a quick moment on Panalytics, which will probably resurface as we get into our work today. So let's get into topic number one. What is resilience? And we can all do a quick Google or wiki search to find a couple of definitions. You know, the things that keep coming up are this idea of toughness, right? Because toughness implies you can get back to where you were, you can recover quickly, right? And sometimes that's toughness in a rigid sense, but sometimes it's in a more elastic sense, right? You take the blows, but you get back to where you were. These are the kinds of definitions we see. And resilience is not just about business, it's about all sorts of walks of life, and it's about nature. I like this image, right? The bamboo can apparently bend almost to 90 degrees. So when the typhoons come through, the giant winds come through, the bamboo can sustain the pressure of those winds, and then the next morning it's elastic enough to go back to where it was. And there's an old Japanese proverb which goes something like this: the bamboo that bends is stronger than the oak that resists. Now here in Queensland we have fig trees in our garden, at least, and every time there's a strong wind, branches fall off, and if it's a really strong wind, the whole tree falls down. And that's because it's not quite as resilient as the bamboo, which would bend and then would resume its shape the next day. But let's go back to business, right? So here are some of the things which come up when we talk resilience in a business sense, right? The ability to adapt. Now, in business, we always have disruptions, right? Not just pandemics like we've experienced now, but wars and recessions and bubble economies which crash, and a whole range of other things, right? And this forces us to adapt, and a resilient business will be good at adapting quickly. And then continuing, you know, I spent a very frustrating hour on the phone with a very large global bank on the weekend, trying to get something painfully simple done, but I was told that the system was down. Yes, I was told that the system was down, and I thought that was a 90s expression when systems routinely went down, but in fact, the system was down, and that implied a lack of continuity in their business operations. I don't know the causes, I don't really care, but that's obviously not a good thing. Of course, what's the point of having continuous business operations if you are losing value, right? So value may be tied up as a multiple of your profit. It might be the people that you have working in your business. It might be the assets, the intellectual property, your brand. But if that's diminishing in value, then we are not a resilient business, right? So continuity by itself is not enough. We have to think of the preservation of value as we define it. And, you know, whatever has happened in the past, it's going to happen again, right? We are always going to face risks and major disruptions in our business careers. And so a resilient business is one that looks ahead and says, well, I need enough cash in the bank to deal with a particular eventuality, or I have other risk measures in place. And I bet you some of you are dealing with businesses now who were very forward thinking and they took measures to avoid future risk. And then there are others who have 5 credit cards maxed out and did not take measures to think of future risks, right? Which of those businesses are the most resilient? I've been talking to dozens, no, hundreds of accountants in the last few weeks. And when we talk about these topics, a lot of them say, well, I'm going to do a business continuity plan for my clients, right? And I question what that is. And some of them have some clarity on that and others don't. Perhaps this is the beginnings of what a resilient business does, but I think there's more to it. And we're going to explore that as we go through our presentation today. The other thing that's missing from those definitions of resilience, I feel, is the fact that resilient organizations identify opportunities and exploit or take those opportunities when they are presented in these disruptive environments, right? It's part of their DNA to say, hey, things are tough, but look, I think there's an opportunity here. And I'm going back to Japan for a second, bear with me, right? This is the work of a 17th century Japanese poet. A haiku, which roughly translated goes, my barn having burned down, I can now see the moon. So in spite of, I'll let you digest that for a second, but in spite of having lost the functionality of my real estate, it's opened up the opportunity to enjoy the magnificence of the moon. At least that's my interpretation. There's opportunity in the destruction that's occurred, right? And I really believe that you as accountants, us as Panalytics, our clients ought to be seizing upon opportunities now because they're there, and that will ultimately make us resilient businesses going forward. So a couple of thoughts. I hope there's something thought-provoking. Let's get to our recipe or cocktail as you see fit here. And I want to propose to you that there are 4 ingredients that we should think about when advising businesses on the path to resilience or the reinforcement of their resilience, right? And the first thing is the ecosystem in which they exist, right? Their environment. And we often call that the market, right? And the second thing is they have to know where they are going. And that's often expressed through some kind of vision statement or goals, which are more tactical, but equally important, right? And the third ingredient is priorities, because there is so much any of us can do in our businesses, literally 1,000 things. We can redo the website, we can hire some people, we can fire some people, we can get additional financial statements, we can launch new products, we can retire products, we can move office. There's a billion things we can do, right? But what are the priorities? What's going to make the biggest difference, right? And then some of you will get excited by this one, because the blood that courses through the veins of a business is, of course, cash. If we get everything else right, the market, the vision, and the priorities, but we don't have any cash to fund our operations, then we are not going to be a sustainable or a resilient business. So we have to put some particular attention in the direction of cash flow, right? What I'm going to argue today, by the way, is that we cannot properly perform cash flow analysis or cash flow forecasting without an understanding of the market, the vision and goals, and the priorities. That's key to understanding the essence of what we're talking about today. Don't think, well, okay, I'm just going to do that cash flow one because I know how to do that, right? Unless you are acquainted with the assumptions which underlie cash flow analysis, which are embodied in those other areas, then you cannot properly advise your clients. You can process data and make a spreadsheet, which they may want to look at, but you won't be adding the value that an advisor adds, because remember, an advisor provides mentorship and guidance. Please keep that in mind as we go through. Let's focus on the market. And you know, we could spend the next year talking about market dynamics, but I'm going to break this down to a couple of really simple questions, right? Markets comprise customers. They are the people who have an interest, or organizations who have an interest in buying the products of your clients, right? So what do they look like? Are they big? Are they small? Are they local? Are they international? Are they growing? Are they declining? Do they have lots of employees? Do they have lots of products? What do they look like, right? We need to get a clear definition. And this is a question you might be asking some of your clients, right? Then what we're talking about in the context of resilience is whether their needs have changed. And this can be quite subtle. You know, as human beings, I presume everyone on this webinar is a human being. We all need food, and we will continue for the rest of our lives to buy food because we need it. But our dietary needs may change somewhat, right? As we prefer more nutrient foods, more local foods, more fresh foods. We prefer different kinds of cuisine as we evolve, right? So the needs of having food may not change, but what food we procure might change over time. And this is something that your clients need to be thinking about. And if in fact those needs have changed, are they temporary or permanent, right? So those are pretty simple, and yet there's a lot of complexity in those questions. And I think part of our job is not to know the answers, but to be able to ask these questions and get intelligent responses out of our clients. Let's look at a couple of examples. So I was with an accounting firm just a few days ago, and one of their main clients is a travel agency, a boutique travel agency, which serves corporate clients. Are you thinking what I'm thinking? Yeah, well, their clients, their corporate clients have suspended all of their corporate travel with no date for resuming that corporate travel, right? So this has put the client of the accountant in a spot, and the accountant is trying to advise them. And one of the things we focused on was to understand whether we've experienced a temporary decrease in demand. And that's the conclusion that they're leading to. In fact, they're thinking there's going to be a spike in demand when people are able to resume travel, but then they're thinking that it's not going to return to the prior rates. These are the assumptions that are being made, and the accountant is surfacing these assumptions by asking these questions, right? And that's a really important role that the accountant is playing. Here's another example, and this relates to, this is actually a Melbourne-based accountant talking to their client, which sells fresh produce. right? And interestingly, in this recent COVID environment, they've had actually high demand for fresh food because more people are having to prepare food at home. And they're now asking the question whether this is going to continue in a post-COVID environment. And their thesis right now is that actually they do expect demand to continue higher than it was, because people have experienced that it's not so bad actually to prepare food at home, and having fresh ingredients is a good thing. And they think that they might have got some clients to adopt, some customers to adopt the procurement of fresh food on an ongoing basis, right? Now, the point here is that the accountant enabled these ideas to be surfaced in their discussions with the client and set the assumptions which are influencing how these businesses are going to proceed in the future. What an important role the accountant played. You know, there's another piece of the market. We're still on the market here. We've talked customers and their needs, but what about the competition, right? And a simple question is, who are the competitors? Now, this can be simple because the competitors may look like you or may look like your client's business, right? You would think a car company that sells family cars is competing with another car company that sells family cars. It can get a little more complicated than that. But what we're really interested in here is whether the competitive environment has changed, because just like the customer needs environment, it does change over time. And if it has changed, are these temporary or permanent changes, right? Pretty simple questions, a lot in there. And our job as advisors is to try and surface thinking on these questions with our clients. Let's look at some examples. This is actually a Brisbane-based business, and for a long time they have basically taught hairdressers the trade of hairdressing, right? And they have a number of schools located across Australia, right? And they are brick and mortar schools. But what they noticed a couple of years ago is that competitors were emerging who were providing online courses. And at first they said, that'll never work, because education is about being in the same room, being across the desk from someone, being with experts and experiencing it in a live environment, right? But over time, they saw decreased demand, and particularly COVID-19, they've experienced a terrific decrease in demand. And they are suspecting now that this is actually a permanent and perhaps fatal intrusion upon their business, right? And the accountant, Melbourne-based accountant, is helping them to digest and understand and quantify exactly the impact of this. Not happy news, but that's our job, right? As advisors, our job is to present the reality and the options going forward. I couldn't help but think about this. This is not a PANALITIX client, but it's well known that we have only a few airlines servicing domestic travel in Australia. And we know that one is indisposed at present. And I'm thinking of all those members of its loyalty program and whether that is an opportunity for the competition to acquire those customers. But is it a permanent opportunity or is it temporary? Will there be some resurrection of that competitor or not? These are the kinds of things that businesses are thinking about, and we as advisors can help surface information on that. Now, let me spend just 30 seconds on a PANALITIX tool, which helps to make that process we've just discussed a little easier, right? This is actually part of a product called Market Decoder. And I'm just going to show you a couple of things here, right? This was actually done for an accounting business where we looked at those needs. Remember, we talked about needs. What is it that the customers of an accounting business need? They might need technical ability, likability of the partners, responsiveness, proactivity, etc., right? We developed a list of those needs, and then we focused on, I've disguised the name of the business here, but that blue column is where their scores on those particular needs are recorded. It's quite a competitive market, not only other firms which look like them, but also the internal CFO at a client company which competes for some of the work of the accounting firm. And using our analytical tools, this firm in this particular competitive set is performing 4 out of 6, not very impressive and not meddling at this point, right? We were going to have Olympics this year. We're not anymore. So I'll withdraw my analogy. But look at firm B. They are way ahead. Now, it doesn't really matter who's coming first, second, third, and fourth. What matters is that we can get exact direction from this on where to improve. If you look at proactivity for our client is only 80 and firm B is 140. So obviously that's a place that they can strengthen their business. This is an excerpt from Market Decoder to help with market understanding. And that's the first ingredient of our cocktail that we're discussing today. Let's move to vision and goals. Now, again, we could spend the next month discussing this, but we're going to spend a few minutes, and I'm going to boil it down to a couple of questions, which I really feel some of you should be asking some of your clients, right? So let's look at these simple questions. You know, I was with a business recently where they retired from a big banking job in Sydney, moved and bought a business. Actually, they bought a butchery, right? And said, yeah, this will be a nice little kind of retirement job. And things haven't really gone to plan, right? It's tough. It's hard. It's much harder. And this gentleman who's doesn't really need to work is really thinking about, do I want to do this? Is this something I want to continue doing? And I challenge you in your businesses to think about this. Is this what you really want to be doing now? And if so, what are the choices? Because it's not a binary choice. Should I continue running and building my business or shouldn't I? It's a competitive choice. What else would I do? Would I join another firm? Would I go and get a job? Would I retire? Right? These are really important questions which business owners have to think about. And our job as advisors is to surface these questions. We don't have to know the answers, but we have to surface these questions, I feel. And if you are committed to your business, and you can feel when someone's committed to their business, can't you? You can feel it, you can see it, you can sense it, right? Then what does success look like? Because we have to help them steer towards a particular direction, which is where they want to go. So let's talk vision for a bit. You know, I just looked up a couple of vision statements, which I thought made a point, right? And sometimes we talk about what we make. Some of your clients may be manufacturers or they sell products. What are those? This particular business gives you a clear sense. Great tasting, healthy, organic beverages. They're not leaving it to chance as to what kind of tea they are offering, right? Let's look at a business which, when it was founded at least, looked at the breadth and the scale of the impact they could make, right? Microsoft said to put a computer on every desk in every home. I wonder if they only thought about the United States when they started, or they thought globally. I'd be interested to know that. And other businesses focus on the benefits. It's not about what they make or what service they provide. Probably a lot of you are on LinkedIn. And so if LinkedIn has created economic opportunity for you, then they are probably fulfilling their vision, because that's what they set out to do, right? And other businesses focus on the how we go about doing things, right? I think this is interesting from American Express. We work hard every day and we focus on being the respected service brand, the world's most respected service brand, right? That's very much a methodology. And then some businesses disclose an underlying philosophy which gives us clues on what they're thinking, right? This business sells eyewear, but they're looking to lead the way, be pioneers in the area of socially conscious businesses, right? So there are a few ideas. Let me be clear. In Panalytics, we're not saying you have to go and make a vision for your client, because that's the job of your client. But I do feel unless you promote the idea of having a vision with your clients and steering them towards something that is persuasive and that they believe in, then it's very difficult to properly advise them. Let's switch our focus though to goals. Right? I said goals are slightly more tactical presentations, right? And we're now looking at things like revenue, easy to understand, top line growth. Hopefully it's growth. Although in this environment, some clients would be saying, well, if I can stem the decline by 10%, that would be a good outcome in the coming months, right? Profit, because I want to take more money out of my business, or I want more money to reinvest into my business, right? A bottom line measure. And then what we often talk about is capacity, or the efficiency with which we use our assets in our business, right? Whatever those may be. Some of our clients will want to impact the community in which they exist, right? Chambers of commerce, philanthropy, and so on. And others are seeking lifestyle advantages, right? Quite often we speak with business owners who are actually trying to exit their businesses, right? Or at least reduce the amount of hours that they're putting in. right? And every single business at some point will undertake a succession activity, right? And so we feel that this is something that should be planned as opposed to thrust upon us, right? So those are the kinds of goals that we find business owners are thinking about. They may not articulate it with that clarity, but that's what they ought to be thinking about it. The tricky thing with goals is that they only are meaningful if we think about a time frame. So I may want to double the size of my business in revenue terms in 3 years, but I want to double the profit in 1 year. That's a perfectly reasonable idea, right? For all sorts of reasons. And we need to get clarity on this. We also need to acknowledge that the relative importance of these goals is important, right? So they're not all equally important at the same time. It's perfectly reasonable that many of your clients are now not thinking about impacting the community, perhaps. They're thinking about survival and resilience, right? Which comes from capacity and profit, right? Perhaps they put their lifestyle goals on hold while they stabilize their business. And some are thinking of succession now and not, or they're not thinking about it at all, right? Now, the other thing around goal setting is that we've got to link them somewhat to our competencies. There's no point Microsoft saying we want to put a computer on everyone's desk right at home if in fact they have no skills in engineering. That would be ludicrous, right? So we need to challenge our clients on where their strengths lie. And then ultimately, we as advisors can keep them accountable. As soon as someone draws a line in the sand in the form of a goal, it creates an accountability program. And that's an obvious opportunity for accountants. Many of you are working with your clients in that way on some kind of quarterly check-in or monthly check-in. A quick look at a Panalytics tool called Strategize, right? This is a part of that tool, which is all about goal setting. Look at the way this client has distributed their 100 chips. They have 100 chips to play with across these goals, because remember, we're interested in relative importance, right? And so 60 of them have gone on revenue, top line growth, right? That tells a story. It tells us that they are very bold and bullish about growth in their market, top line growth, right? And interestingly, this particular business is interested in succession in the longer term, and they feel that having scale will make them more interesting to the potential acquirer they have in mind. This is a different client, right? And let's see what clues we have here. 40% of their interest is in profitability, right? Growth on the bottom line, right? And they think that that's going to come from capacity, improved efficiency, better use of their resources. So that's where they want to focus. They're not interested in top line growth in relative terms at this point in time. And finally, here's a business which the thing that leaps out is that they are very urgent about selling the business, right? And so they're putting a third of their chips on the idea of succession, identifying that acquirer and making themselves ready. And that readiness is largely about profitability, because it's based on profitability that their valuation will be derived, right? So a quick snapshot of the conversations which you can have with clients using a tool like Strategize to arrive at not only clarity on the goals, but understanding the importance of the goals in the context of that business, right? Now, I've spoken for quite a long time. Let's do a quick poll, right? I'd like you to participate. It's a big group, so I'm expecting a lot of participation. Here's the question. You have complete clarity on your goals in the next 6 to 12 months, right? So if you were to take those factors, revenue, profit, capacity, lifestyle, you may have goals on all of those. But some of you will say they are absolutely clear. We have the numbers, we have the timeframes, we know exactly what we want to do. Some of you will say, yeah, we know the broad direction. Some of you will say, well, actually, we're rather unsure, which might be a function of the current environment. You may be revisiting your goals, right? And some of you will say, listen, I'm trying to get through today with my cocktail, and I haven't thought beyond this yet. Let's open up the poll and see what kind of responses here. We had a really active group over in Europe last night. We had Finns, we had Dutch, we had Belgians, and interestingly, the results are going to be slightly different, I think, in this group. I'm going to leave this open for another 5 to 7 seconds because it is an active and large group, and there is a winner emerging. The winner that's going to be a clear winner here is going to be B. Let's 3 seconds. and we're going to close that up. Thank you for your quick participation there. You know, we have 59%, almost 60% saying we know the broad direction, right? That's the winner, okay? We have the next highest is 23%, which is uncertainty prevails, C, right? And 13% of you said it's absolutely clear. Congratulations to you. Congratulations for having that clarity. Thank you for the honest person who said we have no idea as yet. And thank you for your participation. So look, most of you know the broad direction. That's great. Can we strengthen that a little bit? Can you help your clients to strengthen that? I wonder if we did the poll with all of your clients, whether they would look similar in results, right? Back to our recipe, right? We've talked about those two. Let's get into the priorities, because now we have the vision, we have the plans, but what are we going to focus on? Remember, there's so many millions of things we could focus on. So here's a couple of clues to keep in mind when you're talking with clients, right? We like to think in Panalytics about the drivers of a business, right? The things which create success or influence success in the business, right? And the tricky thing is that they don't necessarily appear on a P&L, a balance sheet, or any other traditional financial statement, right? So sometimes when you hand those to your clients, they may be a little bemused and say, well, yeah, but I'm not sure what I should do with this, right? Which is why sometimes you buy other software and other tools to try and make sense of those. But I would argue that you can make better sense of those financial statements than any tool, including a Panalytics tool. And that's what we'd like you to develop the habit of doing, right? And you know, the other good thing about business drivers, it's good and bad, is that it's often those drivers which keep your client awake at night. And if you want to be really valuable to anyone, a client, a friend, you ought to know what keeps them awake at night, proverbially, right? By the way, you can be kept awake at night for good reasons as well as bad reasons, right? Excitement and anticipation, right? So if we can understand what it is that really motivates our clients, right, these business drivers, then we have a better chance of serving them and advising them, right? Just like goals, if we create a list of drivers, they're not all equally important. So we have to choose the ones that matter. Let's take a quick look at some of these, right? So, you know, think about your business for a second, right? How many leads do you get in a month, in a year? Lots or not many, right? If you get those leads, how many do you convert once you get in front of people? Maybe you're good at selling and persuading people to work with you, right? Some of you make a lot of money out of your customers, right? You build them rates which are suited to the value that you are providing to them, right? Others, I'm afraid to say, and I've seen a lot of this with JobKeeper and these ideas, they're running around doing a ton of work without getting paid for it. So the revenue per customer is lower than it possibly could be, right? And some of you keep your customers forever, right? And some of you lose customers frequently for a whole variety of reasons. And in order to deliver value to your customers, you have to invest in a variety of resources, right? Mostly people in an accounting business. And you have to run your business and have general expenses as well, right? Now, look at that list of 6 things. If you were to choose one of them and say, I wish I could just optimize that because it would bring the biggest bang for my buck in my business, right? Which would it be? Is that clear in your mind, right? It ought to be, but it should be clear in your clients' minds, and what a valuable contribution you could make if you provided guidance on where they should focus, right? In Panalytics, bear with me as I give a quick snapshot of our growth equation tool, a very quick one, right? There are some of the drivers that we just discussed, right? Revenue per existing customer, the churn rate or customer retention metrics, right? Lead generation, etc., right? That's the list we went through. And all of our businesses, including Panalytics, are performing at a particular rate on those particular drivers, right? Those are numbers, and we can get them from financial statements. Sometimes we have to do a little digging. But you know, there is the potential that we can accomplish with any one of those numbers by improving or even optimizing the functions in our business, right? In this case, all of those numbers get better, which tells me that this business owner is bullish and thinking ahead and looking at where they can improve and can identify areas for improvement. We as advisors have to temper their enthusiasm and say, well, can you really improve to that degree? To explain to me and persuade me that you can. We don't have to know all the answers, but we have to be satisfied that they can in fact accomplish those numbers. And if we can do that, we can do what growth equation sets out to do, which is to look at the priorities in a business. And that's the section we're in. This particular business is interested in revenue growth, right? Not profit growth, right? Remember, we talked about those goals before. And so if you look down the drivers here, you can see the same ones that we discussed before. But look over here, you can see that revenue per existing customer is delivering around 31% of the potential change in revenue for this business, right? And sales conversion around 18%. So if they could just get better at those things, they could achieve almost a 50% increase in revenue based on the numbers that the client provided. Conversely, if they set about focusing on these lower order drivers, they're not going to deliver value. So where should we be recommending that they spend their time and energy to optimize their business? Of course, it's on the revenue per existing customer. By the way, those are links to a whole lot of materials which are in our Learning Hub solution, which enables clients to take definitive and clear action on any one of those drivers. And you can help them with that, by the way. As accountants, you can help them to implement that change in their business, and what a considerable value you can add in the process, right? Okay, hey, another poll. In case you were relaxing into your lunch, I'd like you to think about this, please. How clear are you on the drivers of success in your business, right? To what extent do you have absolute clarity on which of those things? Is it lead generation, sales conversion rates, retaining your clients, getting more money per client, or reducing your costs? Are you clear on where you should be focusing to bring the biggest bang for your buck? Some of you will say, absolutely. We know exactly where to focus. We know what our priorities are, right? And some of you will say, well, we're mostly clear, but we could honestly do better with that. And some of you will say, well, I'm not really sure. We got some ideas, but we cannot quantify or validate those ideas. And some of you will say, listen, I'm just trying to get through to 5 p.m. today. Things are tough and I'm not thinking about that right now. So I don't have an idea. All of these are plausible answers. Let's open up the poll and see whether your sentiments here are similar to what we experienced before. Again, it's interesting to compare this with our European cohort last night when we did this webinar to them, but we have a very clear winner emerging here, and I'm going to give this another few seconds. Thank you for being an enthusiastic group. Thank you for participating actively, and I hope you're getting something out of this. Remember, this recording will be available to you later. Okay, let's close up that poll to find that 80% of you have said that your prioritization is mostly clear. B is the winner, 18%. We have 13% coming in at A. Congratulations to you. Absolute clarity on the initiatives you're taking in your business. I think that's a terrific accomplishment. And no one said no idea. We have 7% who are not too sure, but you do have a couple of ideas. So congratulations. That's a pretty good result. Be the clear winner with 80%. Let's move on to our final area. Now remember, excuse me for repeating this, but cash flow only matters. Your skills in cash flow only matter if you want to be an advisor, if you can fully understand some of the ideas that we've talked about before, the market vision, goals, and priorities, right? This is not about the fanciness of the spreadsheet, the macros, and how it all fits together, right? It's about understanding the assumptions which underpin that cash flow analysis. So let's have a quick think about this, right? Okay, look, I'm going to go quickly through this because you have a good sense of this, but what is in a cash flow statement, right? The inbound cash from operations is an obvious place to start. Now look at this. What are your clients going to sell in the next month, 6 months, 1 year, right? Which SKU, what category of products are they going to sell? Perhaps they sell services. Is it a hybrid of products and services? How many are they going to sell? That is an entirely market-driven conversation. That is all about the market. It's about who their customers are. It's about whether their customers' needs have changed, right? It's about what their customers are willing to pay because they understand the competitive environment. It's all that market stuff. It's not a financial question. It's about understanding the dynamics of the market and whether they can collect the money in a certain time frame, because after all, we're modeling cash flow here, not just cash, right? And all of those things, the assumptions that are made, come at certain risks, because this is about predicting the future, and we cannot be sure exactly what's going to happen, which means it's prudent to express that in a best case, a worst case, and an expected case form, right? But the main point there is you cannot properly complete that exercise unless you are asking the questions on the market. What about inbound cash from sources other than the operations of the business? And you know, a lot of your clients now might be out looking for loans. Maybe they have traditional lenders such as banks. That's tough right now. Maybe they're going to their investors and saying, could you either further capitalize the business or lend us money? And some of them are relying on management to fund some of the operations of the business, either through reduced compensation or actually putting cash into the business, right? I was with an accounting business whose client is selling some real estate that they have, and actually they're pleased to be getting on with it now. They've been meaning to do it for a long time, but now they need the cash. And then of course, many of you are helping your clients to obtain these sources of money, right? JobKeeper, etc. These bother me a little because some of them are creating an artificial sense of the robustness of the business, and that may come back to bite. Some of these things are available immediately. Some of them will take time. And of course they have risks. You know, let's go back to the investors investing in the business and maybe diluting the existing shareholders. These are the kinds of business risks which you can surface as an advisor, right? And so we should express this again in the best case, the worst case, and the expected case, so we can present all of the alternatives going forward. Now, this is more simple. Remember, we talked about priorities, right? Maybe a priority is to reduce costs of goods sold or expenses in the business right now. We would know that if we did a growth equation exercise and we could see what that delivers to the bottom line of a business, right? Some of those things will have immediate impact on cash, but some of them will take a much longer time to realize an impact on cash, and they all have risks. It's one thing to say we're going to release our 10 of our people, but what does that mean in terms of reputational risk, litigation, and all kinds of other things, right? So it's good to think about this again in a best, worst, and expected case scenario, right? Again, if those are not priorities, and we only know if they're priorities when we've done an exercise like the growth equation, then we shouldn't be wasting time on it. Now, there are, of course, ways that we can spend money other than from operations. Some of these are good news, some of them are bad news. I was with an accountant recently who said that one of their clients has just got notice from the shareholder saying, we'd like a dividend. And management said, what? You'd like a dividend now in this kind of environment? That makes no sense. And the word on the street is that the shareholders are saying, look, we don't think this business is going to survive. So if we take some money off the table now, we're better off than taking nothing off when we're in liquidation proceedings. So these are some of the complex situations. Again, as advisors, we can help to surface these ideas and have these discussions with our clients, right? The loan repayments may be on a schedule. A client in the US is now litigating because they did release a whole lot of people who have sued the business. Another client is fined because they've infringed allegedly infringed some regulations. If these things are going to eventuate, they have a timing and a risk factor, and therefore, as advisors, we should be quantifying them in the best, worst, and expected case. Again, the point I want to make around this aspect of building a cash flow statement, which I'm absolutely sure most of you can do brilliantly, right? It's irrelevant unless we are tying it in to those other ingredients in our recipe, right? There are some other opportunities around cash flow. Trying to create the language. Do you remember we talked about the language of business at the beginning, right? And trying to get your client to think. So I was really impressed by an accountant who told me that he's got his client thinking in terms of terminology like cash burn rate, the net of what they spend and what income they have in a business in any month. And knowing that if you're going to go and spend money on something else, it's going to influence this cash burn rate, and getting the client to think about that. Periods on which we project cash. You know, I'm talking to some accountants now who are literally sending a daily report of cash flow to their clients and getting paid for it, because it's important that the management has visibility exactly into the cash situation even on a daily basis. And then setting mini targets. One is perhaps a break-even point for a particular product or for the business as a whole, right? These are really important in these times of challenging business times, because if we reach these mini goals, it creates a lot of good morale and feeling in the business, right? So helping your clients to set these targets which are reasonable. And then of course, there's no point having targets unless we can track our progress against those. These are all opportunities for the accountant to get deeper. It's not about creating a cash flow statement. It's about integrating it into the business. A lot of cash flow discussions are around policy. And so having policies on how we collect accounts receivable. I get asked a lot these days, hey, should we really be collecting money from our clients now because times are so tough? Isn't that unfair? Well, I'm sorry, I don't buy that philosophy. I think there is a way to demonstrate your humanity whilst still ensuring that your business is astute. And of course, you should be collecting cash and you should be selling additional services, provided those services are needed. Policies on accounts payable as well. There are things that you absolutely need to pay and that you don't need to pay. Policies on reserves and credit rules. Clients are revisiting the basis upon which they extend credit in this environment. So there's a whole nest of opportunity for accountants if we can get deeper and see the nuance which underlies the cash flow statement, right? Let me finish off, and I thank you for your attention and your participation today. Quick look at this case study, right? So, some of you are thinking, yeah, but I don't know a lot of that stuff that you're talking about, and I've never learned it. And what I'll say to you is that you used to not know how to do a cash flow statement or a profit and loss. You didn't know what double entry bookkeeping was. There was a time in your lives, right? But you learned it. And I think it's incumbent upon all of us to continue our professional development and continue learning. And if we continue learning, we build confidence. And confidence is an absolutely key piece of building our advisory businesses and helping businesses to become stronger and more resilient, right? And with that confidence comes credibility. We start to feel like we can help, and we behave like we can help, and we start to express ourselves in ways that demonstrate we can help, right? And then we're ready to build awareness. And I bet some of the accountants on this webinar have clients who don't know what you do, and they don't know what your capabilities are, right? Because they've never asked and you've never told them, and you could be doing a lot more for them, right? Or getting paid more for what you're doing. So we need to build awareness. In PANALITIX, our marketing hub tool is an increasingly powerful presentation of businesses as to what they can do for clients. This is an example of recent content we're spreading around. Look at the title, From Survival to Resilience. Have you heard that before? Yes, right? Because it's an important theme now. And if we can help accountants to deliver this information, this education into their clients and prospects, they are starting to build credibility and also awareness of their capabilities, right? So then we have to reach out and gather information. This is a process. It's not an event. You don't make a phone call and you suddenly get tons of advisory business, right? So we have to gather information and understand our clients better. Look at this questionnaire that some of our clients are sending to their clients, right? Building a resilient business questionnaire. Where are you at? What's important to you? What is significant to you? And what are your strengths and weaknesses going forward, right? This is part of our client insights module that we offer, right? So we gather information, we understand our clients better. This is not for everyone, by the way. Certain clients will be very receptive to the things we've talked about today. And then we engage with our clients as educators. We set out to add value, to demonstrate that we have a lot to offer, right? This is a client in the US who authorized me to leave her logo on the screen. Thank you. She's actually developed a guide, I should say, in conjunction with PANALITIX, right? The guide to building business resilience, right? And this particular module focuses on the market. And she's sharing this with 1,936 of her contact base now, right? To understand, to add value to them, but to create conversations. And it's working, because some of that number are coming back to her and says, we should talk, we need some help here, right? And so she's adding value, and she's now getting paid for planning sessions, right? She tends to use Strategize. Growth equation is another option there. And she also is doing certain projects which have arisen from these conversations using the PANALITIX client classification tool 80/20. That's one thing that she sold quite recently for a client, and then creating more accountability relationships. She never used to do that. She used to, on an ad hoc basis, get in touch with clients. But now she said, let's entrench that in some kind of quarterly cycle where we're going to take the numbers that have arisen from growth equation analysis and we're going to track your progress against them and ensure that you're making progress. So these are revenue generating opportunities which have arisen out of her presentation of herself as a business that can help her clients to accomplish resilience. That's enough on that case study. We like to offer something in these webinars, right? So I'd like to put this to you, something that we configured, right? So why don't you, I know some of you are already Marketing Hub and Client Insights users, that's great. If you're not, why don't you get access to a tool which will help you to present your business with your particular specialization in an elegant and attractive and educational and powerful way among your contact base, right? That's Marketing Hub, and will help you to secure more information on your contacts through Client Insights, through a whole lot of surveys and templates which we have built, which help you get the right kind of information, right? So those are two tools. And then I mentioned growth equation, numeric based for planning, and Strategize also for planning, right? Why don't you help yourself to have those conversations with clients on a level which is strategic and knowledgeable and impactful? And we will help you to do that. Both of those tools are backed by the vast Learning Hub resources, right? Which has all of the supporting material which helps you to succeed with growth equation and Strategize, right? So we'd like to offer this cocktail of, or recipe of, tools for you, right? And we'll ensure that you are properly set up. You will be, your hand will be held as you get through the setup process. But most importantly, I feel we will offer training or development which ensures that you get value out of these, because we don't want to simply let you loose on these. We want to give you every opportunity to succeed, right? And that's in the form of training. This is a 90-day program. We feel that's enough for you to properly get to test out and understand and actually get value out of these tools. And here's the thing, we debated this internally, but we're offering all of that for simply $100 a month. Why? I tell you why, because we believe it works. It's simple as that. We believe it works, and if you try this, and if you work with us to get this stuff done in your business, you will say, I want to continue this, and you will continue, and you will procure additional applications for us, and we'll have a long, worthwhile, mutually beneficial working relationship in the long term. And that's what's really interesting in our business, right? So we want to offer this for a modest investment to get you up to speed, right? And then we'll work from there. So please take us up on this offer. Type marketing in the questions box and we'll ensure you have all of the information that you need, and we can get started immediately, right? If you're already a PANALITIX user, and many of you are, we'll figure out something that makes sense at no further investment, or something that makes sense depending on what sort of program you're on, right? Marketing Hub, Client Insights, Growth Equation, Strategize to help you build those conversations, Learning Hub for learning resources at a tiny investment of $100 per month, $300 in total, right? Let me conclude. And again, thank you for your attention today. Look, a couple of ideas. Advising is about going deep. It's about understanding the context, the background, right? It's not the same as processing data. If you want to do that, you have to think about some of the things that we've discussed on this call today, the market, the priorities, the planning, the vision, etc., right? And so why don't we all ask these questions of our business first? Let's create resilient businesses ourselves and then take these out to our clients, because that'll give us the confidence to find out what their assumptions are on the market, right? And challenge those assumptions, but also on the vision and goals, and also on the business priorities. When you are debating these kinds of ideas with your clients in a productive way, then you are adding massive value, and you'll get paid way more than you think you are entitled to now, right? And then we can represent some of the implications of those ideas through cash flow, right? And then we need to learn how to take the opportunities which arise. I told you about the case study where planning or specific projects or accountability programs emerge from these conversations. We need to get paid for those. We need to structure them. We did a webinar on structuring just a month or two ago. Contact me if you'd like to learn more about that, right? And use tools. We feel Panalytics has the best set of tools for this, but use some tools, right? Use ours or use some, because you want to build scalable businesses here, right? You don't want to make this all about your brain power, because then you'll end up using your brain all the time and no one else will use theirs. And that's not the business you probably want to build. This is a process, right? You may be looking at some things in this webinar saying, well, yeah, but I didn't really understand that bit. That's fine. So invest in your professional development in the long term. You're going to be doing this for a long time. This is not a fad. Building resilient businesses is not just because of COVID-19. It's because resilient businesses are good businesses. And that's what you should be helping to build. And so build your own resilient business, because there's no better platform upon which to advise others. I'd like to thank you again for your attendance, your participation. I wish you the best of luck with your businesses in this interesting and challenging time, and also with your clients. Please get in touch at any time to discuss anything arising here. Please type marketing into the questions box and we'll get you more information on our offer today. I look forward to seeing you next time. I'm going to close up now. I think there's one final survey that John is going to publish. Thank you for your attention. See you next time. Goodbye.